Hey, how's it going? We're live here for the Fed. I'm Stockalypse. We're going to be seeing what Jerome Powell has to say coming up in just under 20 minutes. We've got an interesting time here right now. We've got a bull market on our hands. It's clear now. It's undeniable. But is it going to continue? That's the question. That's what we're looking at right here. This is the first meeting of the year. And for a lot of traders, since they're starting to come in, new traders are coming in again. This is going to be their first real Fed meeting. You know, they might have done some last year. Maybe they heard about it, but a lot of people are only just now getting into it because of crypto. Crypto is a way for smaller investors to be able to get in on it. Because traditionally, to make good money in stocks, you need a lot of money because the good stocks are the high price stocks. And they move the way you want them to move, but they're expensive. So the less money you have, the worse your options are. So you end up in crypto, buying meme coins. Maybe you buy some Bitcoin, some Ethereum, some decent alts. That's fine. That's good. Honestly, I think buying almost anything at this point, as long as you can verify that it's not a scam, crypto is probably a good bet in almost anything, as long as it's, like I said, something that you're sure isn't a pump and dump, which there are a lot of those, and that's the problem. The opponents of crypto like to point that out all the time, like, oh, it's for crazy stuff, and look at all the scams, and, well, everything's like that, man. Really, cash is the important one. That's the battle. People think it's all about like blockchain and traditional fiat or whatever. Like, no, actual physical money is important, because once everything's digital, it's a different world. Having a way around the digital is the thing cash provides. That's the one thing that makes it so valuable, is the fact that it offers an alternative to the future. The future is a theoretical future. It all takes place in the mind, on the internet. It's not taking place in physical reality. We're slowly transitioning over to that sort of a field. And that's why digital money is so important, because that's what you're going to be using in that world. Physical cash won't matter there. But if everything you have is there and they shut you down, or something stops you, or something prevents you from going anywhere, you have no options. You're done. You have to look to the physical world, which is why I don't ever think physical cash will disappear. It might take different excuse me. It might take different forms. That happens a lot. I mean, we've had so many currencies over the past even 100 years, not to mention all of human history. It's unbelievable. So physical, and that's why gold persists, because it's been the most consistent form of physical cash, basically. The problem with gold is it's not easily scalable. You need something to be scalable in order to take care of the entire planet as it grows or shrinks. That can be bad either way. Let's just say the population shrinks, but gold keeps going, right? And it's not scarce anymore. Then it doesn't matter. So it has a risk of being invalid as well. There are so many different things that can make a currency invalid. And there are so many things that make it good too. So I think, honestly, having all forms, a little bit of all forms, is not a bad idea. Or as many relevant forms as possible, like some physical cash, some precious metals, some, investments, and some crypto. Boom, there you go. Cover all your bases. And some actual physical assets that aren't cash, things that you could trade with. Anything that actually has value in the future. Like property always has value. Certain items always have value. So it's good to have a little bit of everything, I think, just in case. Because if you were to take the worst case scenario, the most important thing you could have is physical assets, right? I mean, there's nothing more important than having stuff you need if the world has gone to shit. If there's no market, if there's no Amazon anymore, it doesn't matter how much money you have in the bank account. It's not going to do anything for you. So physical assets are the absolute, because you always use physical assets, and they're there if you need them in the worst of times, so that you can't beat that. So number one is physical assets. And then you can go with everything else. But having some kind of gold, like, all right, if all the computers go down, gold is still good. I mean, paper money maybe, but there might be a new form of paper money, whereas there's not going to be a new form of gold. So yes, you're right. That makes sense too. And really, any precious metal that is necessary. In fact, I think in a society where gold would be the currency, gold would be one of the least valuable metals, because what you're doing with the gold is buying the metals you actually need. Even though you can use gold for stuff, you're going to need other metals a lot more. Iron, for example, it's in everything. All of our basic metals. Anyway, so what are we doing today? I'm kind of getting off topic here. We're looking at the Fed. And what happened so far? Well, they announced rates. They said unchanged. We knew that. That was obvious. So what did the market do? It popped. Now they're going through the news. The algos made decisions. People already know what's going on for the most part. But this is just the paperwork. We still have to hear from Jerome Powell. That's coming up in about 13 minutes, which that's the part we're waiting for. Are we going to be able to make a trade? So you could have made money on this setup right here. If you look at this, these two green candles, this is a 3-minute chart. So this is within the span of 6 minutes. We could say in here 10-ish. You had 10 minutes. Well, really, you had 3, less than 3 to get here, and then it kind of bounced around. But if you were betting on the upside down here, boom, doesn't matter if you bought here or here, you still won. In fact, if you were trying to buy here and you ended up buying here, you'd feel bad until this happened. You know, oh, great, that's nice. Hopefully you got in time. So now what are we doing? We're retracing a little bit. Why? Because yes, rates were unchanged. But what did they say? 1 fewer rate cut next year. Big point. The other one, higher for longer. There you go. That's all you need to know from this entire thing. So what's come out of the news that's important so far? Those 2 things. Everyone else is scrambling over the details and trying to figure out everything else. But if you're just going on the market itself, you're looking for the big things. And those are the big things. When can we have cheap money again? I want cheap money. That's really what it is. People are trying to get all technical. It's like, when can we have cheap money so we can gamble harder? When can we do 2021 again? All right, when can we do 2020? Because the reason 2020 went the way it did was because we had such a massive crash. And if you weren't there, it was insane. We had never had a crash that big, that fast before. Well, actually, that's not true. In 2008, we had sections that moved like that, or maybe even more. But overall, that was the biggest drop we've had pretty much in history in a very short amount of time. And that bounce was incredible because we did a lot. It wasn't just that we put rates into the picture. It was also QE and QT. So those are the 2 elements of the coin. I mean, rates are part of QE and QT, but they look at them separately because there are policies, like how much the Fed is going to soak up. How many bonds is it going to buy? Is it going to stick its foot in the different markets, like the currency market or the stock market or whatever? You know, is it buying junk bonds? What's it doing? Like, that's what it did in 2020. Not only did they step in and say, hey, we're going to start buying stuff now because that's what the Fed does. It's there to like balance that. When there's an abundance of selling, they need to kind of step in and prevent it from going too low. It's like, what is the Fed? You get all technical. It's basically just that. When the market's selling off really hard, they get in there and they just kind of be like, all right, let's take some of this up. That's it. It's you can make it so complex, but that's basically what they're doing. So they're just like, all right, let's make sure it doesn't fall too far. It needs to come down, but we don't need it to go to nothing because we're all invested in this. So that's the other thing you have to not worry about. This is the one thing you can take comfort in. They're invested in this. You know, like people talk about the Illuminati and people running the world and all this stuff. It's like, yeah, but it's because they're invested in it, not because they literally have like some cabal where they're laughing that they have control. They don't think they have control. That's the thing people don't realize about all these conspiracies is like the people running this stuff don't think they have control. We think conspiracy theorists think of it as like they're laughing and, you know, cackling in a room because they figured it all out and no one can stop them and they're confident in it. It's like, no, they're just like everybody else. They're scrambling. Even if they're on top, everyone's out to get them. So it's not some like easy lifestyle where you're just like, I know what's going on with the world. It's like, we have control. And I think if we do this, it might work or it might not. And I hope it fucking works because I don't really know what else to do. That's what they're doing. That's what they're thinking. So we're at this point where we have inflation has come down quite a bit. 2022, inflation went insane. In 2023, it went even worse, and then we finally got it under control. As under control as you could call that, because it's still going up, but it's not going up as fast. And that's the point. Things take some time to set in. If you go up at a slower rate, people can keep up. But if you go too fast, too quickly, then the pace of raising minimum wage and increasing competitive pay and, you know, the job market going up and down and the market's going up and down and everything feeding off itself, you get to a point where they have to come in and make a decision. And they decided we're going to hold this tighter for longer just to make sure, because these numbers have been coming down, but they were coming down a lot quicker before. Well, and that's to be expected. When you shoot up really fast, you come down really fast, but it's like a bell curve, you know, like as soon as you've hit that peak point, you're not getting as much out of it. You could put the same amount of effort in and get fewer and fewer results. So they're going to have to squeeze harder and harder until they get that last 1% out. So everyone keeps talking about how they're going to just say, oh, let's go to 3%. Let's go to 4%. No, what they're going to do is they're going to squeeze. Because eventually, here's the thing. They would technically do that, but that's a very far down the road decision. They have to make sure that they can actually, that they've exhausted their options first, because they have so many things they can do right now. That's the other thing people don't realize about the market. There is so much we can do. If there's a problem, we're in a much better place than we were. So people think about like, oh, there's a problem and then everything goes to shit. It's like, no, there's a problem. Things start to go to shit. We can step in and we can make things easier, make the environment more open so that cash can flow in and plug the leak. It's like, you know, it's like your body. You get a wound and then as the blood flows, it brings the shit there and activates the shit there that scabs it up and protects it. That's what the releasing of the money does. That's what inflation is. It's not that inflation keeps blowing up this balloon bigger and bigger to pop. It's that it keeps increasing the density of the balloon as the balloon expands. And that's why people don't realize it's going to last longer than they think it will. They think it's going to collapse because they're thinking of a traditional balloon that you poke it with a needle and it's done. No, it's like poking a bowling ball. It can collapse. You can crush a bowling ball, but it's not going to, a little pin isn't going to do it. It's going to take a lot more than you think. And there are so many things they can do in the meantime to let it continue. So what are we doing right now? We're waiting for Powell. He's coming up in about 7 minutes. And once he does, I'm just going to go to him and I'll let you know if I make any trades. Right now, I'm not really thinking about it because I'm just watching the range. And this wasn't off enough from predictions for me to think that there's potential to catch something massive. Now, so far, it's a bullish reaction. We're almost to Powell and we haven't fallen all the way back down to where we started. It's basically come to about halfway and it's bounced off that. Because what usually happens is there's the initial shot and then there's kind of the range that forms. That's what I'm waiting for, is that range that forms from this initial shot. So at this point, we're sitting at about 516 on the SPY, 517 maybe. And we're bouncing around there. So 5,170 if you're on the SPX. This is what we've been waiting for. So my thought right now is that they're going to squeeze rates for longer than we expected, but not by much. And there's one fewer rate cut than they were expecting. But that's just one. It's an adjustment, but it's not a huge adjustment. I said beforehand, any adjustment they make that's negative will impact in like some bearish action in the market. And so far, there hasn't been that bearish action, mostly because they're waiting to hear what Powell says, but because there's been a little bit of bearishness, but it's a very tiny amount. So the perma bears, they're going to focus on that hard and they're going to short anything that looks good to them is going to be a short. But we have upward momentum working against them. That's what the bears don't realize. They're fuel for the majority of the ride. I mean, it's like 70-30 or something like that. So right now we're in the 70% again. And you never know how high the 70% is going to go, but that's the momentum. And it's hard to short the momentum and win. It's easier to short. It's still hard to short in a bear market, but it's easier to short in a bear market because your chances of winning are higher. And it'll probably happen sooner. Where in a bull market, yeah, you might even be right, but the ability for things to pump, just because the amount of cash circulating, is much, much higher. So I'm waiting to see what that range is when Powell comes out. If it breaks down, we'll see. But the other thing is, what does he say? So yeah, okay, they've made it slightly more bearish, but not that much. What next? Well, that depends upon what Powell says, what he's going to say on these numbers, because he can be hawkish or dovish at this point. If he's dovish, the market might take off too much. Okay, I had to take our something real quick. So anyway, we're about 4 minutes away from Powell coming out. That's what I'm waiting for. What is Powell going to do? What is he going to say to this? Because what usually happens is Powell comes out, he starts to talk, the market drops. There's a point at which it kind of settles and then it takes off quickly. That's the more sure setup. But I don't know if we're going to get that. And that's what I want to see. Is it going to pump straight out the gate because there's some strength coming into this? Or are we going to get to a point where Powell decides that he wants to hit the market a little bit and keep things flat? So is he how dovish is he going to come out, or how hawkish is he going to come out? And that's what we're waiting for. The first few minutes, that's when you'll be able to tell, and that's all you'll have. Like, you have about 5 minutes on this thing. So once it happens, I'm going to be concentrating super hard on that. We'll have Powell coming through. Those are the times that if I make a day trade, I make it then, because it's just not, day trades are not the easiest to do. I watch people do them all the time, but it's not usually the same crowd that does them all the time. It's usually like someone does one and then they don't do another one ever again, or someone does a couple and then, because that's what happens. You do a few decent ones and you size up a bit and boom, you get crushed. You don't know what to do after that. That's common. I'm not surprised that right now that's happening a lot, because more and more people are coming into the market. So we're seeing the gamblers start to come out. We've got crypto. It's been taken off. Obviously, we've been having a pullback lately. If you go online and read what people are saying about it, you'd think that we're back in 2022. You know, it's a bear market or something like that. No, this is a nice pullback. In fact, let me see if we got a couple of minutes. I'll pull up Bitcoin real quick. We've come pretty far recently. This bottom chart, I'm going to bring this up so we can see a little better. In the past 2 contract cycles, we've come up quite a bit. So coming down halfway in between the last consolidation point and the high is not an issue to me. In fact, even this area right here where we were before had the same issue. It had high volatility right here. So it's not surprising that, number one, we're coming into an FOMC meeting. So of course things are going to pull back a little bit, especially things like Bitcoin, because it's run up so much. But does that mean it's done? No. If this is bullish, crypto takes off again. That's the thing I'm looking for. Like I watch the stocks, I trade the stocks, but right now I did crypto full mode. All right. People are not taking crypto seriously enough at this point. It's shown us that it's time to come back. And this is just the beginning. If that's true, then we need to get ready now, because if we don't, we're going to miss the thing we know we need. And that's what I'm going for. I'm not taking my stuff out. I'm not overbuying. All right. Like I've been buying. I've drawn down half my cash in the past, I don't know what, 2 months or whatever, since this has been popping off. I still have some, but I'm making sure that like I'm ready for this, because I don't want to overbuy right now and lose all my money in case it goes lower. Because that's the thing that people don't realize, is this could drop a lot further. I would still be fine if the thing dropped all the way back down to the low 50K range, because that is a consolidation point from the beginning of this cycle. It hasn't even been that long. So if it comes back down to here, that's still fine. That's way up from where it was. If it comes even lower than that, let me back up a couple of notches. Yeah, if it comes down to like this range right here, this is a good point, because you see it shot up, bounced off, came up to and stopped. Like this little range right here is a decent one. That'd be like the mid 30s. So yeah, if it came down to the mid 30s, I would still be cool with that. Like this is a massive run. Look at how quick this happened. And it may not look like much depending upon what kind of charts you look at, but think about it, this is like $20,000-$30,000 worth of movement. That's a lot. $30,000. So just having one of those things gives you $30,000. At this point, 64. And after it's come down a little bit and people were worried about it when it was in the low 60s. It might have tapped the high 50s, I don't know, but to me it looked like it was just getting into like 60, 61. Or maybe like 61, 62. I don't even know if it got to 60. Whatever it was, it wasn't dropping fast. It wasn't a worry. We've had some serious run-ups, so we've needed some time for people to take profits. And before FOMCs is normal. So people that are thinking about crypto and not the FOMC are missing the big picture. This is happening because of the FOMC. The FOMC is where all the money for everything comes from. That's why the Fed is important. Oh, here we go. Powell's coming on. You boy got some calls for a minute.
Weakening in the labor market.
Not expecting anything crazy, but just doing a quick one.
Continue to see
boy is out just in case.
Prices
probably going to keep going, but that was a nice quick one. The bull run is still on.
You know, we're looking for more good data, and we would certainly welcome it.
Thank you.
Thank you.
All right, there we go. So that was Jerome Powell. We had a nice dovish conference. The market is still going. Early on, I said the bull run's still on, and that's it. It doesn't matter what happens today. He just said, all right, it's cool, keep going, just don't go crazy. That's what we were looking for. There were a few key points in there. I mean, he was basically saying, every time they said, hey, well, what about this? You know, what if we do this? It's like, we're just going to do what is working, dude. Like, shit is working. Look at the data. It's actually working. It doesn't have to be working in perfectly the same direction all the time. It's going to fluctuate, but it's getting better. So what do you want? You know, why are we going to change what we're doing when it's working? That's what they're saying. You don't have to get too into it. So all my longs are still on. You know, I didn't want to come in with puts or anything like that. I didn't want to come in with calls. I mean, I came in with some calls, so I waited for, here's the technical section right here, this specific spot. This is right when Jerome Powell comes on. So the market pops up as soon as rates come out. It finds what its range is, settles somewhere in there, and then it's time for Powell. So, and then you get this section right here. Powell starts talking, it falls fast. It was bouncing. I think when it started to get to this candle right here, actually maybe a little before, I don't really remember. I came in and I bought something, and then I mentioned it during the broadcast because I was like, well, I don't know, just in case it actually does something. And I took this little section right here to get out. I mean, it's still going, so obviously I wish I had it, but this was what I was looking for. If you see this kind of a reaction and you get a chance where something bullish is said or it's not as bearish as feared, the shorts have to get out quick. The ones that know. Like what I did when I got out, it was just like an instinct. It wasn't even like, oh, this might go on, because I know it might go on. It's shown that it's going to keep going for a while. But just how, like, what the direction of the questioning was going to be, wasn't sure, because some of the stuff could have tanked this. Like the thing that made me drop it was the fact that it's a little bit more bearish in one aspect than I thought. But I have to go back and see what that was, because I don't remember exactly what the thing was. Everything was happening so fast. I just got out of that thing. I think it was somewhere before this even happened. So I was like, yeah, I got this pump, I got here, and then I heard him say the thing, and that's why it stalled right here for a little bit. So I think that was because I got out like right away. The second I heard that, I was like, oh shit, I got to get out. And the market, like from that point, it was like popping until it hit that, until he said that. I was like, oh, if there's a chance, like my instincts got me out. And I mean, I was wrong, obviously, because he kept going, but like that was a point that could have, depending upon what the rest of the market was going to do, could have been really bad. So I just got out in case people were way over levered and had to correct, because it was, I think it was the thing that prevented this from being more. Right? Like it hit a point where it was pretty obvious, and then it's been settling in this range here as it ticks up. So that's fine. I didn't want to bet on anything really heavy today because it wasn't out of whack enough to justify risking too much. So I just went with my normal play. I grabbed the cues. I waited for a moment when it was like getting, when it was finding some support, and then he said something bullish, boom, get in. As soon as anything looks like it's rough, which it would be around this point anyway, because this is what the previous high, so that was the resistance. And that's why I did it, because it was up here, it was struggling. I'm like, I'm giving it a second, but it's not doing this quickly enough. Sometimes you'll get it in like the third bar, sometimes the second. But this one, it was sitting here for a little bit. So I was like, it's been sitting. The guy said something weird. I got to get out soon. And then it sat for a little while longer, and oh man, maybe I was right. And then it took off again. So that was the thing. Even when I got out, I said, all right, this is probably going to keep going. So don't be surprised if it continues after that. But hey, whatever. I got I'm just trying to get my $100 contract. That's it. Boom, get out. You get that, you're good in a day. Everything else I have is long. I'm just letting my longs go. So how's Bitcoin going to do? It's fine. They didn't change their stance on that. They have to accept it. Everybody has to accept it right now. But the thing is, Bitcoin, and they know this, but I don't think they understand how severe this risk is, actually. This is one thing where I think the average dude fucking Robinhood person knows a little bit better than them. Like, this is going to get way out of control faster than these people realize. And it's going to be a problem before they're ready for it. So I know they're looking at it, and I know they're worried about it, but there's so much going on right now with all the different, like, think about there's a new world currency that's gaining steam at this point. It's still a long way away from actually unseating the dollar, but it's a technical possibility with a bunch of people that don't like the dollar, so it makes sense that there's some viability to it. And that's why Bitcoin is important, because Bitcoin kind of circumvents that chain too. It's like it bets on both sides. I guess that's the beauty of Bitcoin. People that are shitting all over it don't have an alternative that does the same thing. It's like, okay, yeah, tell me, you can make this much wealth and have this much protection from so many things and have it be cheap enough to get at, like, for anybody, reach at any level. That's what I should say. Cheap enough to reach at any level. I mean, this is a threat, and this is also a wonderful thing. It's a way to make a lot of money. And if the system does well, Bitcoin does well. If the system doesn't do well, Bitcoin does well. It doesn't matter which way it goes. So it's a good investment when people start freaking out like they have been for the past week. It's been like a week, dude. I can't believe the stuff I'm seeing online at this point where people are like praying that the thing doesn't go any lower. And it's like, dude, you want it to go lower. It needs to go lower. That's how you drop your average. You know what? I've been raising my average. That's what everybody's trying to get their average lower. I'm like, dude, my average is like super low. I don't want to fuck it up. That's my problem. I had this nice low 20s average after a while, because I started buying in the 50s after I completely nailed the top. So I was down for a while, and then it was like, all right, I'm way up at this point. So I'm cool. I just want to be able to add to it. So I've been adding on these little dips. It's been kind of annoying because I'm like, we get to all these little dips and it's not really going that much higher. So there's always the worry that like, I was buying before the long like trough that's before the thing comes back, which I wouldn't be surprised if it happened, as part of it. It just normally, it creeps up on everybody because nobody's ready for it. They always want to be, but they never are. And that's one of the things I say is like, You're never going to be as ready as you think you are. So just what can you do to manage? If everything's not perfect, what's the best you can do under your circumstances? And I did that today. I was like, all right, I'll take my quick win on this pump right here, even though I could have held it and continued to do so, most likely. I just wanted to get out quickly because I have all these longs right now. I have plenty of crypto. I've devoted most of my cash over to crypto, but I still have about half my cash left. You know, I've had a few little buying opportunities here and there, but I had a couple of wins too. I actually won on Pepsi, which could have been way, way better, but I dumped 4 of those contracts to prepare for the end of the quarter, because that could have been bad. Well, the end of the contract cycle, I should say. Didn't want to be, and I was right, because it just, oh man, it crashed. But since then, we've had this nice little pump, and it looks like it's going to continue. So everything's still where it was. Estimates are going to continue to go up by the normal amount, and the Fed did their best to not be overly hawkish on anything but the necessary stuff. Because that is one thing I'm going to have to start switching to the other way and be like, all right, just slow down. All right, we're getting to a point where I'm saying like, okay, don't worry, we're not crashing, but soon it's going to be like, slow down, don't go too crazy, because it's about to go the other way. You know, but right now, here we go. It's still on. So anything you're long, I don't know, do what you do. I'm doing the same thing. So it was an interesting interview. I'm going to have to go over it and make some clips, because it was, there's actually a lot said in there that was important. And I think a lot of things are going to go over people's heads, because the trading aspect was probably grueling. Everyone goes like, well, I need to trade these things. You know what? You think the making any money by holding short-term derivatives from here to here in the same direction does anything? No, dude, it's probably lower at this point. Even though the stock is higher, the people that were trying to go for those like major wins, they're getting crushed. Like the very outskirts of the volatility are getting crushed right now. This is, you know, once it has a direction, it's pretty obvious where it is at a certain point. But it can still run away at different times. So this doesn't mean, I'm still waiting to see what happens for the rest of the day. We've got another half an hour till the market closes, and then we'll see what people say. How are the news outlets going to spin it? That's the next thing. All right, we've got a bullish Fed, a dovish Fed, let's call it, and the market's okay with it, but it's not freaking out, right? It pumped, but it's not gone. Bitcoin's sitting what, 65, 66, yeah. Low 6 or high 65s. Not surprised. We've also got a little bit of consolidation here, so, and the lowering and the dropping volume as the average is coming up. So we're kind of reverting to the mean right now. Trading is still continuing though. It's not like the volume's completely dropped off. We still have a good amount. Usually the end of the day is one of the higher volume portions of the day. So stuff's probably going to rush in at some point. The shorts, the question was, how short did people become? How short did people get? Because at this point, we're a little bit above, I don't know, everybody's averaging up at this point. If you're a short right now, I don't know, if I was a short, I would have been out a long time ago. I didn't want to go short against this. It's so unlikely to win. I mean, if you're gonna short something, don't do it in a market where the actual tide is against you. Right now, it's obvious which way the market is going. You just go in the direction of the market. And that's what I'm doing. I'm just staying long everything. I'm not changing anything up. I'm letting it go. And if I see opportunities, I'm grabbing them. You know, like that win on Pepsi was nice, because I used a little bit of that capital to get some more of the crypto that I wanted when it had that nice decline. You know, and that's what I say. It's like, don't buy crypto when it's green and you're FOMOing so hard. Just set it down. Even on the off chance that you should have bought it at that point. Just trust me, 9 times out of 10, it's not the right time to buy. So just once that kind of stuff happens, you get some people taking profits, the idiots start to make the cascade worse, and then you get down to a more reasonable level. And that's when you grab some stuff. And the reasonable level is when there's this sudden massive drop and there's support right away. That's a sign that crypto is going. People are looking at this from so many different angles now. These single events are not always that important. This, however, is how money gets into everything, including crypto. The Federal Reserve said it's cool, keep going, just don't go crazy. There you go. End of story. Let's see how the media spins it. You know, I missed the last chunk of that, or I should say a little bit before the end of that for a little bit, but everything else was basically exactly what I thought. So I want to go over this. I want to think about it, hear what people have to say, because we're going to have all kinds of opinions. But since everything's green and it hasn't turned around at this point, I'm expecting green. So hopefully everybody's been long this, because it's going to be interesting. And who knows, things could turn around, because that does happen. It's pretty rare in an environment like this. But the important thing is all of the tools we need, if there is a problem, are available again and in greater supply. That's what they're saying. We're good, dude. If shit goes off, we got it. We have way more than we had last time in 2020. Way more. So let's do this. Well, I'm going to get out of here. I got to think about this for a little bit, because it's been an interesting day, but this is how things go sometimes. You just got to see how they play out and then figure how you want to go from there. So the bottom line is, bull's still on. Let's do this.